in this video, I'm gonna go ahead and break down one of the tools that I love to use to identify when is a good opportunity to go ahead and enter into a stock when it comes to trading in the short term, and why I use this tool to identify confirmation. So with that said, let's go ahead and hop into my laptop and look into this a little bit deeper. Alrighty, so we are officially in my laptop, and in this example, we're taking a look at Tesla stock from a 5-minute aggregation period. Now, we could see that in today's trading session, Tesla stock sold off a significant amount. In fact, if we went ahead and just mapped it out from the open all the way to the close, we see that Tesla stock fell down approximately 6%. So definitely a big day down, right? So a lot of selling pressure going on. Now, one of the things I often say on this channel, right, if you guys follow me, is that you want to have a holistic approach when it comes to trading and or investing, right? Now we have to remember, trading and investing are two separate vehicles, and you want to approach them differently. However, regardless if you're trading in the short term, like, you know, just looking at Tesla stock from a 5-minute aggregation period, or if you're investing in the long term, right, looking at years and decades into a company, you still want to look into several different data points, right? And what do I mean by data points? Well, you don't just want to rely on price action, right? You want to pay attention to the fundamentals of the company, right? What is the company doing? What type of business are they in, right? How are their revenues, right? You want to pay attention to monetary policy. You know, what is the Federal Reserve doing as far as, you know, hiking rates or cutting rates or pausing rates, because that influences the overall economy. You want to pay attention to economic conditions because you want to see how the economy is doing. You want to look at fiscal policy, right? Because maybe there may be an injection of money going into one sector after a new policy has been made. I mean, I could go on, like the list goes on. There's alternative data, and then of course there's technical analysis, right? Now, you know, I don't want to make this video very long-winded, but, you know, a lot of people, when it comes to trading, they only look at the chart, which is, you know, considered technical analysis. But like I said, you want to look at several different data points because, for example, in this, you know, scenario right here where we see Tesla selling off, it wasn't, you know, Tesla selling off because it just broke a certain level and then it ended up falling down. No, there's underlying reasons why Tesla has recently sold off. One of the main reasons in, you know, this example right here is that we just had Tesla report their earnings, you know, for this scenario yesterday, right? And, you know, although they did beat their earnings in terms of revenue, we did see gross margins compress, and that wasn't good. And then, you know, along with that, we also had, you know, forward guidance from the CEO of the company, Elon Musk. And, you know, we didn't hear too much optimism from the CEO in the short term, right? So all this plays a major factor, right? So, okay, we know that earnings were kind of bad, but then on top of that, if we look at the weekly time frame, we see that there's been a big descending trend line, right? So that's a technical approach right there where we see, you know, Tesla stocks getting rejected. Okay, well, we're looking at things in the long term, but what about in the short term? If we're going to trade Tesla in the short term, how do we know when to enter into this trade? So one of the things I like to use is a moving average, right? So just to go ahead and explain what a moving average is, right? And I'll go ahead and put it on the screen. I'll put the EMA and I'll explain what that is, but just in general, a moving average is just an indicator that's used in technical analysis that helps smooth out price action by filtering out the noise from random short-term price fluctuations, right? It's a trend-following lagging indicator because it's based on, you know, previous prices, right? So, you know, in that said, it's just basically smoothing out the price action. Now, in this video, I have this blue line over here, which is the exponential moving average. So what makes the exponential moving average different from other moving averages, right? Well, the exponential moving average puts much more emphasis on recent price action, right? So I have it set up as the 9 days. So within the last 9 days, it's going to put more emphasis on that. And that's how it's going to go ahead and smooth out and create this moving average, right? And so I know I like to go ahead and explain things in many details, but there's a reason behind why I try to go ahead and cover things, right? I don't want to have people just like blindly entering into a trade. And so with that said, even if we're trading in short term, you know, we want to pay attention to many different conditions, but how do I know when to enter into, you know, Tesla in today's trading session? Well, you know, once I have the EMA set up, we see that once, you know, the price action kind of falls down, below the exponential moving average, that's kind of a signal to go ahead and enter into short Tesla, right? So you could get put options if you're, trading options, or if you're just, trading shares, right? You could go ahead and short Tesla. Now, if it was the inverse, right, and let's say Tesla stock actually went upwards, you would go ahead and look at the exponential moving average as an entry point when you see the stock kind of go above it, right? We kind of see that Tesla did curl above it over here. However, one thing that we have to understand when it comes to using indicators is that at the end of the day, it's not a one-all be-all. It doesn't mean that just because Tesla crossed over it, that automatically it's going to continue going up forever, right? Because we have to understand that it is just one data point, and it's something that we just use for confirmation. So we see that once Tesla, the candles broke below this blue line over here, that was a confirmation, right, to go ahead and start shorting, right? So we see Tesla stock kind of go down, and then we see that once it broke above, the exponential moving average, it shows that it's curling up again, right? And if you were trading to the upside, you could have, used that as confirmation to go in. However, it would have been a short trade, as, it did move up, but then eventually it got rejected, right? And so I want to go ahead and show you guys another example of this, but in the inverse, because right now we're talking about Tesla stock going down. I think it's always easier to explain a concept with the stock going up. So we're going to go ahead and look at SQQQ, which is the index ETF for the NASDAQ, right? But this is a triple leveraged inverse of it. So to kind of just explain that a little bit easier for beginners is that, let's say the NASDAQ goes down, well, this is the inverse, right? It's going to go up, and it's also leveraged 3 times, right? So that's just the most simplest way to explain it, right? But I mentioned, we're looking at the inverse because the overall regular NASDAQ, right? If we just look at the index for the QQQ, it went downwards. So, of course, if I want to see upward price action, I'm going to go to the inverse of it and see it go upwards, right? So just to go ahead and clarify that for you guys. So, how would we use the exponential moving average? Well, it's the same thing, right? We see that price action is going up. However, you don't just want to enter in just at the very bottom, right? Just because, we sold off a bit over here, and you think, okay, we'll buy low, sell high. No, you want to wait for confirmation, right? And this is, again, using technical analysis with a confluence of other data points. And so we see that, this candle broke above the exponential moving average. So that shows us confirmation that price is going up. So this is where you'd most likely want to go ahead and enter in for a trade, right? And then you could see that, obviously it started going up, but then it kind of broke below, it started consolidating, and then once again we broke above it and started moving up. And then we see the same situation over here, consolidation, but eventually we broke above it and started moving up. Now again, one of the things I want to highlight is that when it comes to, using the exponential moving average, this is really something you only want to use for trading in the short term, right? I don't think if you're going to be a long-term investor, that it would be wise to go ahead and invest in a company, right, for the long term, just based on, the price action for one day, right? I think that would be silly, right? So, for someone like myself who I trade Tesla, going back to Tesla, all right, the example of Tesla, I trade Tesla in the short term in my trading account, but I have a separate brokerage account where I invest in Tesla in the long term. Now, I invest in Tesla for several different reasons, one of them being the fundamentals, right? I would never invest in Tesla in the long term just because it crossed above the exponential moving average. We have to separate trading and investing and understand what our objective is. And for the example of trading, we see, of course, if Tesla's getting rejected, it's falling down below this exponential moving average. That's a good entry to go ahead and short Tesla. But hopefully this video does clarify a couple of things for you guys. Hopefully I was able to properly introduce one of the tools that I use for confirmation, which is the exponential moving average. And hopefully you guys found some utility in this video. If you did so, consider hitting that subscribe button. And also make sure to check out the links in the description below, because I talk about, the concept of confirmation in the Push and Profit program. And there's several other benefits of joining the program as well. There's, a whole lesson library where I go ahead and break down what it is that I look into when it comes to trading and investing in the stock market. Along with, you guys have access to my daily briefings where every single day I talk about what's going on in the overall economy, and I oftentimes provide trade ideas for what stocks I'm looking to trade for the day. With that said, guys, make sure to also watch this next video right over here, and I'll see you guys on that next video. Take care, guys.